Gbenga, Olatunji here, auditing, finalization, and reporting. Whatsoever a professional does must be reported. And when we're talking about auditing profession, it is good and mandatory to finalize and report. So we are looking at it from the revision angle and taking a snapshot of everything that we need to discuss about auditing, finalization, and revision. We are going to be looking at a lot of things in form of IASs that we must touch on, like IAS 700, which talked about unmodified report. We are going to look at IAS 705 that talks about unmodified and modified reports. We are going to talk about IAS 706, which emphasize on emphasis of matter. We are going to be discussing about the basic elements that we must know about auditing, finalization, and reporting in form of modified opinions, in form of what we need to know, what does truth and fair view really mean. We are going to discuss on paragraph of emphasis, or what we can call emphasis of matter paragraph. What is pervasiveness? We are going to be looking at what pervasiveness really means and the three types of pervasiveness, because we need the knowledge about what pervasiveness really is in order for us to actually understand what qualified, modified, or modified opinion is, what adverse opinion is, what disclaimer opinion is. So we are going to be looking at it so that we can have a broader view of it. We are going to touch on basic elements of an auditor's report so that we'll be able to understand what we should include should, in case the examination comes in form of writing a report, we should be able to draft a report, quality report for that matter, during the exams. We are going to talk about the two types of audit report. We are going to talk about what materiality is and how to work on materiality as auditor and use it to conclude our opinion on the audit that we have done. From GJAMES Associate channel, we are welcoming new people that are joining us. If you are watching us for the first time, we say you are welcome, and we would love that you quickly click on notification button, click all and subscribe to us, like, share, so that others around you could be reached and be beneficiary of what we are doing here. Let us go into full details about what we are about to do today. And it is important as we continue to make something clear that we are going to go into all these details not in a particular order, but we will touch on everything that we need to touch on, especially this that we just project in front of you in no particular order. Let us start. What is true? What is fairness? When we're talking about truth and fair in audit, when we're talking about something that is true, especially in the profession of audit and accountancy, we are talking about an information that is factual, an information that conforms with the reality. That is, somebody had dig deep into the matter and could say that, having gone through the facts available to us, this is what we can conclude about this particular organization or financials presented to us. That is what true represents in accounting. In addition, the information conforms with the requirements of standard, like when we are talking about ISA 700, ISA 705, and ISA 706. So those are auditing standard, international standard on auditing that we must ensure that every audit work conducted conform with. Then when we are talking about something that is fair, when we say what does fairness mean? Because fairness, what is fair to you actually may not be fair to me. So when we are talking about fairness of information, we are talking about information is free from discrimination and bias or biases, and in compliance with expected standards and rules, accounting rules, concepts, conventions, and the like. What is materiality? When we are finalizing and we are looking at our materiality threshold, don't forget, by the time we are auditing, we must go back to look at our materiality threshold to know whether what we set out to do from the beginning of the audit conforms with the reality of what we met on ground on the field. Materiality is an expression of the relative significance or importance of a particular matter in the context of financial statement as a whole. Like I said, by the time we set on an assignment and audit engagement, we have some threshold that we want all the captions. When we are talking about captions in audit, we are talking about every segment of the financial statement being broken into. So every aspect that we have here marked that this at the threshold, the risk threshold, we must ensure that we must go back and ensure that we know whether we overshoot it or the threshold, we are within the threshold or we are underneath it. Under may be okay and preferable, but no auditor will want to have an excess risk being carried on because the professional indemnity may not eventually carry it, and it's not too safe for the professional firm to undertake. So that is what materiality means in the snapshot sense of things. What is pervasiveness? We are building all these blocks because we are going to need them to build an holistic auditing, finalization, and reporting experience. So when we are talking about pervasiveness of probably misstatements and error in the financial statement being audited, we are talking about a term that is used to describe the effects or possible effects of financial statements on our financial statement that we are auditing, of any undetected misstatements. Here now we are talking about the general effect on the financial statements of a single item, of an error or errors when compiled together. How spread abroad is it as a whole on the financials? And when we're talking about pervasiveness, we'll be looking at it from three perspectives. When we're talking about pervasiveness, the first one that we can talk about pervasiveness are those that are not confined to specific elements in the accounts or items in the financial statement. They are not that specific. Two, those that are confined to a specific element. Let's say the element is receivables or payables, is specific to that aspect and we can trace it. Then the third one are those that relate to disclosures, which are fundamental to users' understanding of the financial statements. So these are the three major breakdown of pervasiveness when we are talking about pervasiveness, and these three actually dictate when we are talking about modification of an audit opinion. As we continue, we are going to get there just as we are building the bricks that we need for the holistic view of auditing and finalization of auditing and reporting on auditing. Let us move on now to elements. What are the elements that we are going to find in an auditor's report? When we are talking about elements that we must find in an audit report, I do tell students that Some are very cheap, but during the exam condition, we may not remember. And that is why we are having a review like this and revision like this, so that we can get used to some things and sometimes, so that when exams tension come, we'll be able to weather it. Basic elements of an auditor's report, we must talk about the title. Basically, every audit must have title, just like every work reported on must have title, the subject matter. So the financials, we must address our report to someone, that is the organization. So we are talking about the addressee. We are talking about introductory paragraph 2. This is the third element. We must introduce our report to the readers, and when we are talking about it, we must be able to identify the entity whose financial statements are being audited. We must mention them in our introduction. State the financial statements that have been audited, for what year have we audited. You must be able during the introduction to let any reader at a snapshot understand the identity of the title of each statement that makes up the complete financial statement. Don't forget the breakdown of financial statement, components of financial statement. We have done video on this, but I want to believe that you know too. Also, at the introductory paragraph, we must ensure that we refer to summary of significant accounting policies and other explanatory information, so that readers and users of the financials can easily understand and flow with the financials and know where to get what information and what is relevant to what they are currently reading. Also, we must specify the date and the period covered by each statement. That in our paging, we must be able to specify the period in which the audit actually covers. Also, director's responsibility must be reiterated in the financials, audited financial statement. We must let the users and the readers understand what are the responsibilities of the directors in these audits carried out. Also, our responsibility as professional accountants and auditors, we must be able to mention it, what responsibility we bear in the course of this audit. An audit report must have an opinion page, or what we call opinion paragraph, in which we express whether what we've audited conforms with relevance standards, whether it's true and fair, whether the users can rely on it or not. We must be able to say all those, and in our opinion, express our opinion, and the opinion could be modified or unmodified opinion, which we are going to flow into. Another element that we must not forget to mention in the audited financial reports or statements is other reporting responsibilities. We must be able to mention it. And like we are going to talk about emphasis of matter paragraph. Other reporting responsibilities and who are bearing them must be able to mention if there are any. Auditors must sign, and we say auditor's signature must be on the record. Directors must sign their own portions. Now that Federal Reporting Council has mandated the chief financial officers to sign too, so it's possible now we have 2 or 3 executives signing an audit with us as the auditor. We must date our report, and of course, auditors' address too must be mentioned in the report. So basically, these are the critical elements that we must mention in the audit audited accounts, and you see that actually they are not that difficult, but during exams, if we are not that used to them, we may forget one or two, and we need to get used to them so that they will not fly away during the exams. So let us move on to types of audit reports. We'll be talking about the unmodified report, which we can call unqualified audit report, and modified audit report, which we can also call qualified audit report. So now when we are talking about unmodified audit report, what do we mean? When we are talking about modified audit report, we are talking about an expressed opinion by the auditor when the auditor concludes that the financial statements show a true and fair view. It represents, it conforms to the best of their work done, carried out. They are satisfied. No scope, creep, and nothing to the best of their judgment is material enough to make them have it qualified. And it should be stated clearly here and boldly that once an auditor is not given an unmodified report, we must have a section, a paragraph that we call emphasis of matter paragraph, in which we let the user of information know why we are qualifying the report. I want to believe that we get me. What I'm saying is basically we have two types of audit reports, and once we do not have the unmodified, then we are going to have the modified. So when we have the modified, why we modified our opinion must be stated, and that statement is made under a paragraph that we call emphasis of matter paragraph. So we must have emphasis of matter paragraph on an adverse opinion, on a disclaimer opinion, on qualified opinion. Basically, when we are talking about qualified opinion, we are talking about expression of opinion that is not too clean slate like that of modified rather, in which we believe that there is a material error or the like, but it's not that pervasive, not having generic influence on all the works. But when we are talking about adverse opinion, basically it must be material, it must be pervasive, and also the financial statements are materially misstated. Then we have an adverse opinion expressed. And when we disclaim, we must disclaim when we have what we call scope creep, scope limiting rather. When we have scope limiting, maybe by way of management not responding to us when they need to respond, and we are not able to carry out an aspect of our planned audit work. Auditor must be unable to obtain sufficient appropriate audit evidence before we can express a disclaimer of opinion. And the three, whether the qualified opinion, whether the adverse and the disclaimer opinion, we must ensure that we have emphasis of matter paragraph. As we are revising, is there any other thing that we've not mentioned that we started with? I think, what is an audit report? What is an audit report? And basically, when we are talking about audit report, we are talking about a means of communication by a professional accountant, in which we call auditor, independent auditor, communicating to the people that engage in or the firm. We call it an audit report. So it's a means in which auditor communicates his or professional opinion on the financial statement examined by him or her or his or her firm to the shareholders of the company. From GJAMES Associate Channel, if you are yet to subscribe to us, please share, subscribe, or like us, comment. Let us hear if there are anything maybe we did not mention when we started and we are not able to. I know we touched on everything, but should in case you have anything we think that we should add, or what topic you want us to talk more on, especially as exams are approaching, why don't you just comment and let us have your view. From GJAMES Associate Channel, Gbenga, Olatunji FCA, we'll be signing off. We are going to look at another topic that is enlightening and will guarantee the success in your examination, professional career, your business life, and the like. Your success is our work. GJAMES Associate Channel, we are value to life, we are value to your businesses.